We've got our CoinDesk Week in Review panel with Managing Editor of Technology Christy Harkin in Toronto and U.S. Markets reporter Helene Braun. Welcome, and Helene. It's an all-girls show today.
All-girls show.
All right. Let's talk jobs report first thing. So, Helene, you've been tracking that. If this is what the Fed wants to... Is this what the Fed wants to see? And, what does it mean for the December Fed meeting coming up?
Yeah, this is not what the Fed wants to see. It's certainly a lot better than in the summer. And, there has been a slowdown in hiring towards the end of the year, so that's good. But the labor market is still way too tight. The 263,000 jobs that were added in November is significantly more than was forecasted. And it's also more than was reported in October. So that's good news for the economy, but very bad news for the Fed, who's still trying to cool down labor demand. There are two other metrics that the Fed is closely watching that are also worrisome. One is labor force participation. That's the percentage of people who are working or actively looking for a job. That percentage continues to fall. It was 62.1% in November, and it was slightly higher in October and September. And that's a problem because it means that companies have to stay competitive when it comes to pay to find workers, and that will keep wage growth high. And wage growth is one of the most important drivers of inflation. It rose 0.6% on a monthly basis and is more than 5% higher year over year. And that's a big problem for the Fed, and that's a number that has to come down to lower inflation.
More importantly, or, just for our audience's sake, how did it impact Bitcoin?
Bitcoin initially dropped about 1.5% after the jobs report, but it has since rebounded. Markets moved a little higher after Powell's speech on Wednesday, where he seemingly confirmed the 50 basis point move in December. This morning, after the jobs report showed a much stronger hiring, obviously markets were back down for a brief moment. The thing here is, though, there's a common understanding that Powell gets a glimpse of these numbers before he makes his final comments before a meeting. So really, rather than reading too much into today's report, markets should stay focused on what Powell said on Wednesday. And I think that's where we're seeing this rebound in the past, or that's why we've been seeing this rebound in the past couple of hours.
Yeah. So speaking of Fed Chair Jerome Powell's speech on Wednesday, he addressed the central bank's outlook on rate hikes in D.C. at the Brookings Institution earlier this week. We have a clip. Let's have a listen.
Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. We will stay the course until the job is done.
So interestingly, Bitcoin jumped after that speech, and it looked like we had a good bounce for Bitcoin, but also we're looking at the Fed likely to raise rates by 50 basis points in December. But given this latest jobs report, could that perhaps rein things down in terms of, the Fed may not be wanting to ease rates so soon?
Probably not, because as I've just said, he probably saw the numbers before and he still decided to pretty much confirm that they're going to go with 50 basis points. His speech certainly wasn't dovish. He reiterated that the path for inflation remains highly uncertain and that inflation is stubborn, and that they will continue to fight inflation until it's back down to 2%. But I think in terms of December, there's certainly a possibility that they're going to go with 75 basis points, but as we've heard him say, that possibility is very, very small, and traders on the futures market are only seeing a 30% chance for that. So I think we can almost with certainty say that it's going to be 50 basis points in December.
Okay. All right. Switching gears, taking a look at some drama happening in the Bitcoin world. Christy, you've got it all down. So let's start with the European Central Bank's scathing criticism of Bitcoin in a blog post called Bitcoin's Last Stand. What did the ECB have to say about Bitcoin?
Well, it's not the ECB. It's two people from the ECB, and that's a distinction that I think should be made. It's a blog post by two members of the Market Infrastructure and Payments Division, and that's the problem. A lot of people are like, ooh, the ECB is saying this. No, it's an op-ed by two members of the Market Infrastructure Payments Division. So this is not, and there's a big disclaimer in the thing saying that the views expressed in each blog entry are those of the authors and do not necessarily represent the views of the European Central Bank and the Euro system. So do we need to get all up in arms about it? Probably not so much. They also make some maybe a couple of good points, but mostly a bunch of silly points, and many of them can be very easily refuted. And I'm going to start with the most obvious one, being that Bitcoin is rarely used for legal transactions. That was my favorite, choke on my coffee reading it kind of headline. We've covered the fallacy on CoinDesk many times over the years, most recently in August as part of our Sin Week series, the fallacy of this particular headline in an article by George Kaludis called Criminal Crypto Use is Growing, but that's just half the story. He digs into the data that really does tell us what the half of the story that the ECB writers and many others consistently miss. And that is that the illicit share of all crypto transaction volume, and that includes Bitcoin, has actually fallen since 2019 and is at a scant 0.15%. That's according to an updated report from Chainalysis in August. First and foremost, the amount of cryptocurrency value received by illicit entities in 2022 year to date ranks below both the same period in 2019 and 2021. So we are looking at 0.15% being tied to illicit activity. That is hardly the majority of crypto transactions.
Well, how does that compare to the, cash US dollar being used for illicit activity?
Yeah, like that
would be a good comparison.
And that's the thing. It is, it's a fraction. It's a fraction of all transactions that are tied to illicit purposes in general as well. So it really, really is a misleading headline and a misleading thing to try to get out there in the public. And of course, under the banner of the ECB, people are going to take that seriously. And then they go into how, there's all these lobbyists and how the current regulation of cryptocurrencies is shaped by misconceptions, to which I say, heck yeah, it is. Misconceptions like the ones that are being published on the ECB blog. Yes, we do have a lot of people who are trying to educate people in Washington and around the world, in Europe, for example, so that they actually understand the technology and its potential and understand what it is they're legislating. But people are busy and they don't have time to understand all the technology and go down the rabbit hole like the rest of us here at CoinDesk. So we are, trying to give them a little more than the surface level of information that often comes from fairly uninformed mainstream media types. So yeah, there's a lot of misconception out there when it comes to regulations, but I don't think it's in the way that they want to say. So that was one of the kerfuffles that happened this week.
The second kerfuffle, we've got CASA. And CASA is what many consider to be a Bitcoin-focused self-custody firm. They're adding ETH support. Oh, the horror, I think you said in your notes, Christy. So we had the CEO and CTO, Nick Newman and Jameson Lopp, on yesterday defending the move, basically saying it's in demand and was always in the plan. What are your thoughts on, and what was the community reaction in the Bitcoin world on this?
Well, it was funny because we got to break the story on CoinDesk, which was always fun. So we were prepared and ready to go. We watched the drama unfold on Twitter with our popcorn in hand, and we knew it was going to happen. But I mean, I'm with Nick and Jameson on this one, that, it doesn't mean that just because they're including Ether in it, that they are not providing a really valuable service to Bitcoiners as well, who want secure multi-signature key management for their Bitcoin. And they were listening to their customers. If their customers hadn't been asking for Ether custody, I don't think that they would have bothered to put the work into it. So it was drama. But I also suspect that they did their math and went, yes, of course, we're going to lose a few maxis over this, but we're going to pick up a bunch of Ethereans. So, I think that everybody is entitled to secure crypto custody.
In the wake of the FTX collapse, the self-custody seems to be more important than ever right now. Also, we're looking at the release of Bitcoin Core version 24. What can you tell us about that, Christy?
And I love this because we, as one of the things that the ECB report said is that Bitcoin appears to be neither suitable as a payment system nor as a form of investment. So it should be treated as neither in regulatory terms and should be delegitimatized. And yet they're also arguing against granting leeway for innovation. And Bitcoin is a work in progress. And part of that progress happened this week because Bitcoin Core version 24 came out. Now, here's the thing. Nobody really cares too much about this because it's really nerdy and in the weeds. And you're not really going to notice what happened here with Bitcoin 24. This wasn't Taproot. This wasn't something major. This wasn't the Ethereum merge. But it is a development, and it took about 7 months of work by over 100 developers and contributors. Now, what are we going to see with this core development? So the main benefits will impact Bitcoin Core Wallet, which is mostly used by people who run their own nodes. Peer-to-peer communications, that's how the peers or nodes communicate, the state of the blockchain among themselves, and the graphical user interface of Bitcoin Core itself. So unless you're really into working with Core, you probably won't notice these improvements, but that's fine. This is all the sort of development that will make future improvements and innovations on Bitcoin that you will notice down the road. And if the easier it becomes to run a Bitcoin node, the more people hopefully will do it and self-custody their keys using a Bitcoin node wallet. So these are all really important improvements. And that is the Bitcoin news this week.